Now it's time for the Foggy Windshield, and what do you see up there?
Unfortunately, I see the housing market falling even further, and it's likely that it's going to impact the economy, which I hate to say, but that's the way it looks.
Well, housing numbers are horrible right now. This is from the Commerce Department, and they said in their latest release that new home sales fell 16.9% to an adjusted annual rate of 250,000 compared with revised rate of 301,000 in January, and that missed the economists' expectations of 290,000 and represented a 28% decline from February 2010. So that's a huge drop.
Yeah, so the number of sales that we had in 2010 was 28,000 or 28% greater than what we saw recently.
Yes.
So that's a significant fall in the number of home sales going forward, and this is the lowest number on record. It goes all the way back to 1963, and of course we're always looking for records because that is a sign of something going on that's significant. So we might be close to a bottom.
That's true.
But it still doesn't look good.
Well, also the median price for new homes sank 13.9% to $202,000, and that was the lowest level since December 2003.
So prices fell 13.9% more. Oh my goodness. So, you know, the home buyer tax credit pulled all that demand forward and helped prices stabilize a year ago, but that's gone. And now prices
They're
are falling
again.
Falling
Double
again.
dip, maybe.
Yeah, well, obviously. Yeah.
And also on Monday, the National Association of Realtors said that sales of existing homes fell a greater than expected 9.6%, and prices dropped 5.2% amid tight credit conditions and a growing backlog of homes for sale.
Yeah, so the existing homes are falling, the new home sales are pathetic. There's certainly no recovery yet, and I know a lot of people are hopeful and they're hoping to work through this, but we've got to work through all this inventory.
We have a little ways to go.
Yeah, for sure.
And there was also Case-Shiller of the Case-Shiller report. They did a paper showing the average of their estimates suggested consumer spending is taking $240 billion a year hit, thanks to 30% or so fall in house prices between 2005 and 2009. So a 30% decline in housing prices.
Well, we've seen that, but the $240 billion a year hit is the hit to the economy of economic stimulus that's not going on because housing prices are so far down. And so this is a problem, and it's why it's weighing on the economy. And you know, government assistance is waning. We're starting to see the Treasury wanting to sell mortgage-backed securities. We're seeing tightening credit. So all of these things point to the impact of housing hitting the economy again, and that's our economy is a little too fragile for this, and it's a big concern.
And what's your takeaway?
So my takeaway is that housing is a market and the price is based on buyers and sellers. So until we get rid of all those sellers, meaning foreclosures, they will continue to outnumber buyers. And until we have more buyers than sellers, prices aren't going to rise.